All right, traders, welcome back. Hold on one second. I'm gonna start the morning edge here. Just
Webinar online.
oh, did you hear Amanda? That would be you guys. That's you guys that are here. Hold on, let me just tell everybody we're starting. Because I know a lot of people are so focused on trading, they forget that the morning edge is starting. So just making sure everybody knows whether or not they decide to. I mean, it's extremely volatile today, so obviously, there's going to be a lot of people not tuning in because they're so focused on their screens. But let's go ahead and get through this because I don't want to take up a lot of time today because things are obviously busy. It took me a while to get my fill in Bitcoin. I was telling the guys and gals in the chat room, I actually shorted Bitcoin while I was on I was on the FACE webinar. There was a little bounce here, right here when we bounced back up towards, no, that wasn't even it. It was right here. We bounced from like 36,000 to like 38 something. And it was like 38.7 and I sold it. Here. Hold on. So you guys can see it. So I sold it at 38,721. I closed it at 33,853. So a little bit higher than what it was, but I actually meant to close it out, closer to like, it was like 34. It took me a while to get filled. But one of the things that I want to point out regarding Bitcoin is that we're at the 161% extension. So, or near it, close enough to where you have to be a little careful. I'm going to write that down as support for Bitcoin, but obviously as we've sold off through 42,000, that's going to be important support. It obviously, turned bearish. And so while it's below 42,000, you just have to continue to be bearish. Now, like I said, this is going to really create some issues with risk aversion and sentiment, as we talked about on the FACE webinar. If you missed it, you just got to be careful because sentiment's going to be turning. So what does that mean? Well, that means, the dollar and the yen are going to catch safe haven bids, and you got to continue to look at that. Like if you look at the dollar yen, which was bouncing this morning, look at what happened. As soon as Bitcoin started really selling off, I mean, we broke through 109.20 and we broke through support. So while taking a look at the dollar yen, this is really important. What's today's low? 108.73, right? That's today's low right now. We've been monitoring this ascending trend line, which, as you can see, I have an alarm set up for it right here. But as I've been writing, it was 108.50. Now it's 108.60. Sorry, excuse me. If that breaks, that's going to turn the dollar yen bearish. And if that breaks, then, matter of fact, let's find out what intraday resistance is, whatever the highs are, 109.33. Okay, so we're just going to say 109.30. If 108.60 breaks, then that would be like one of the bigger cues to me that things are going to turn, nasty, right? So that's just something that I think we should all focus on. Okay. Just, if we break through like 108.60, I think that's going to turn the yen really strong. And you got to look at like these yen pairs. I actually think that the euro yen was set up for a great short. Obviously, if you saw the chart of the day yesterday, right? Is the euro yen ready for a turn? I think it is. Look at the Canadian yen. You know, the Canadian yen's ready to go. Kiwi yen. We broke down. Actually, you know what? You guys are all here with me, so let's go ahead and do this. A little late here, but let's see. We're gonna do an entry of 70 here. I'm gonna do this pattern and play with you guys here. So 78, 10. Shoot. Yeah. I'm gonna share with you how I do this, like a pattern and play on a wedge, right? So I would be a seller all the way up to 78, like 45, 78, 45. Now let's do this. Let's call that 78.25 is where you actually end up getting in. You know, your stop should be 79. You don't want to be short if it goes 79.50, right? And then I have to make some adjustments from here. So target, let's say, since this is a wedge or a triangle, okay. I think you can target 77 cents without much issue. I think what's going to be the bigger issue that you have to be really careful of if you short the New Zealand yen is this trend line here. But if that breaks, we should be able to extend this entire wedge. So that target would be about the 127% extension, which would be 74.64. So I think 75 could be done. Okay, so let's go 75. That's a risk reward ratio of 2.6 to 1. So that's doable. Okay. So that would be a triangle. That pattern in play. There we go. That pattern plays in. So now we are going to look for entries in the New Zealand yen. I'm try to get short here a little higher if I can. Entry order. Yeah, I'm just showing you guys what I do here. I'm gonna try to get a short around. Let's see. You guys listening to me? Or are you just watching, or are you trading right now? So if I can get short right here, so I'm gonna actually try to short around the 39 level, 38, somewhere up here. So if I can get short at the open, like right here, that's what I plan to do. So I've got an entry order to sell the New Zealand yen on a bounce. So you guys can kind of see where my thought process is when I put in a pattern in play. You know, it's like, okay, where are going to be our targets? Where's our, you know, where's our entry range, you know, and try to, you know, find a good entry based on, you know, the risk reward. If you were on with me on the morning edge, picking up the dollar Canadian down here at 50, whatever I did, I sold it when it hit like 70 something, 78. So if you got out of it right now or around 121, better than me. You did better than me. I was focused elsewhere, but you know, hold on. Hold on this. somebody, sorry. Okay, anyway. Let's take a look at, let's go through the charts, because I know Steve has got a lot to say this morning. I'm sure, even though he's not feeling great. Or Steve, are you feeling good? You back? You feeling all right?
I'm 95% there, mate.
Oh, good. So yeah, that's not too bad. As I was telling you yesterday, most of the people that I've witnessed that have had 2 shots, they feel horrible the second shot for whatever reason. And maybe you guys can provide any light if based on your experience. Anyway, the euro just bounced back to a 50% retracement, previous support. So that resistance now comes in at 22.15. I'd say maybe we might get a rally back up to 122.25. That should probably be decent resistance today, intraday. I don't know if I would necessarily want to be here. Let me just show you guys from a longer term perspective. As I wrote to you on the analysis right here last night, end of day analysis, the euro dollar had a strong close, but should face some resistance at the 122.50 level overnight, and 22.61 may also come into play. While above the 121 level, the bulls retain control. Okay, so the overnight high was 122.45, because that is, this horizontal resistance right here. So that's obviously big resistance, but support right now, as you can see, is right here at 121.80. If we break through 121.80, got to be a little careful with longs. I do think it's still bullish while above 121, which would be, this trend line down here. But just be careful, if we slip through 121.80, we could slide all the way to 121, right? Sterling. Big resistance held yesterday that I think we wrote that down at 142.20, I think, maybe. 142.20. Okay. So that was big resistance. Support now should be, let's think about that for a second. %, 618, a lot of support right through here. You see it through previous high, low, 618, all comes in around 140.86. So I would say 140.80, probably offer some support. 142.20 is resistance. It's bullish, but you got to be obviously a little careful, as this actually looks more like a channel now. Right. So if it's a channel, that means the lower end of this channel could be tested, which could take us all the way back down, down here at some point, just keep that in mind. Aussie, big rejection, 78.20 yesterday, 76.90 is support. So I'm just going to write down that same number. Kiwi still in a triangle, 72.80, 71.60. Okay. Those numbers are getting smaller and smaller, shallower, as we tighten up in this range. So just, dollar Canadian. Remember, we do have the FOMC minutes today, guys. Brock said first shot was no problem, but second shot had a 36-hour light fever. Wow. Yeah. Okay. That's that seems pretty common based on you know, based on what I've heard, the people that have two shots is the second shot's always like a little, you know. Anyway, support here is going to be at 2050. Resistance is at actually 121.10. Then I'm going to go beyond that. So just 120.50. If you get a chance to own it at 120.50, I think that's, you know, that's what you want. 121.10. 122, just in case we move higher. I'm taking us off bearish for now. The reason why is I think we got a false breakdown yesterday, and you guys know why I thought this was a little bit of a shakeout. You guys have read the blog. You guys know where I'm at, right? Dollar Swiss resistance 90.40. It's bearish while we're below that. So support is at 89.60. And it is bearish while we're below that. But if we break this, then you guys know that 91 is key resistance, right? Because that's like the 200-day moving average. We break back above here, and then then we flip like bullish. So US dollar, Norwegian krona. Told you that was a shakeout yesterday. I told you.
Blake,
Yep.
sorry to interrupt. Your Kiwi yen pip. Can you check the levels again?
Did I screw it up?
I just want to make sure they're
78.10.
yeah. Entry looks fine.
78.45. Yeah.
And
It's
target 79.5 and invalidation 75.
Oh shoot.
We can change that, no problem. What I can
target 75 and validation. So
yeah.
Can I switch that out from my end?
No, we have to cancel it. Okay, I'll cancel it.
I can. Wait, hold on.
No, you can you?
No, you can't, because it will change the direction of the trend.
Yeah.
Oh,
Look,
it has it.
It's right where it is, so I'm just going to close it. That's basically 0, and then you can put it on again. Okay.
All right. You know what? Yeah, let's close that. Shoot,
I'll close it. Don't worry. You continue doing what you're doing.
Okay, I'll put it back in. Damn it. It should be bearish, right?
This guy Blake.
I know. You know what? I quit. So resistance right now is at see, that's what happens when I try to do things like totally I was trying to show everybody what it's like for me to go through the process of putting in a pip, and then I put in the wrong numbers, and then it's like rubbing your stomach and patting your head at the same time. Just it's hard to do. I'm going to say resistance right now is this spike low here, which comes in at 832, and then 840. Okay, so let's write both those numbers down. We have to keep it on bearish for now, but 832, 840.
And by the way, it was Takis who pointed it out to me. So thank you very much, Taki.
Thank you.
So it's Takis the guy that doesn't trust Blake and double checks things.
And
that's what I just heard.
I'm going to tell you, my son does not like Takis anymore.
And Takis actually just wrote, "Don't trade or make new pip while in webinar." How many times do I have to tell you that?
He has a point.
1971 is support. And I mean, he doesn't like the Takis chips because they're too spicy and it's making his stomach hurt now. So just letting you know, Takis, he's not a fan anymore. And that is as of like this weekend. We have a bag of Takis chips in our pantry, and he won't touch them now. So let's watch this little down sloping trend line here at 2010. And I'm going to write down a couple numbers, so I can't put in all the zeros. Okay, there we go. It's range. Let's get dollar index. Sorry, I'm going to get through this, guys. I know Steve's chomping at the bit to talk about his barista in his crypto exposure. 90, let's see, 90.10. We have to stay bearish while we're below this with the dollar index. You've got to. Okay. By the way, I was just about ready to pick up some more. Where is that New Zealand yen? I'm looking for it. Sorry, guys. Okay, 78.22. Okay. Dollar index at 89. Obviously, this 127% extension, 89.65 is big support. Now, remember, we do have FOMC meeting minutes. I don't want to downplay them too much, but as you guys know, I think the risk is, holy cow, that's kind of hawkish. You know, that's going to be the risk. Now, let me try this again. Pattern in play. Sorry, guys. I need to get this out here before it starts moving, right? So new pattern in play. Just give me 1 second. I'll do this correctly. So entry area 78.10 to 78.45, 78.45. Target 75. And validation 79.51. Triangle. And that should be good. Okay, now we're good. All right, so now I'm going back to, what did I not do? Gold and silver. So gold. So if you guys are, you guys sold precious metals, the problem with this move now is if Bitcoin continues to slide and these cryptocurrencies continue to slide, they might catch a bid in these precious metals. Remember, they're the anti crypto. So in my opinion. So anyway, watch for some support here in silver at 27. Resistance is 28.70. And you can't be bearish while you're above this 27 level. You just can't. I mean, I can flip us from bullish to range now because what we're doing is we're forging a lower high on the daily charts. Okay. So while that 78% retracement's holding, I think we can put it in the range. But if you look at gold is powering above this trend line. So gold is outpacing silver, which is more of a risk off. That's a risk off point of view, right? So gold, I mean, I have to keep it in bullish while we're above the 200-day moving average, and that comes in at 1850. So while we're above 1850, we have to stay bullish. And the risk for the move in gold at near term is right here. That's previous support. That's also 78% retracement. That comes in at 1903. So I'm going to say 1900. And S&P. I mean, look, the S&P is still holding up. I mean, it's still holding up pretty well. But if we get below 4035, then we should test 4,000 or 3990. So 40, what was that? 40, what was the low there? The low was 4035. Okay. Let's write down this 3990, 4035, right? Now resistance on rallies. Let's remove that. So any bounce back now to 41, well, 4140 would be kind of a stretch at this point intraday. This is all 41.10. Actually, it looks like it's 41.18. This was 41.10 right here. This right here is 41.20. So I think any rally back to 41.20, it's going to find resistance. And we're in a range. We break below 4,000 and we're going to have to flip to bearish near term. All right, so there you go. There is your bias chart. Sorry it took me so long to finish that. Stelio, Steve, it's all
Blake.
yours.
Are we
We
just
don't
saying
want it.
names now? Blake, John, Takis.
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 Takis
right.
from
All right, guys.
Panagiotakis.
So you guys, good luck today. Be really careful out there. You know, just be really careful out there.
Too late, bro. Too late. Already my crypto account blew up. Sorry.
Yeah, right. Okay.
Okay, thank you, Blake.
Thanks.
Thank you, mate.
So, you know, I was saying yesterday, could cryptos lead other assets? I think we are, you know, equity is obviously lower today. Why do you think we're down 1% plus in S&P? And I think cryptos have something to do with it, right? I'm not saying they're going to be following, obviously, closely or one-to-one.
At the lows of the day today, Ethereum was down 56% from the highs.
Yeah.
The S&P is 3.5.
I know. I'm not saying they're gonna be you know, one for one, but you know, when you have something like cryptos which have become big enough now crashing, they're gonna take some other assets with them. I mean, it's only natural. That's what I'm saying. Obviously, short term, right?
Let's discuss what the store of value is. I say we
No,
start from there. What do you think?
let's not do that. Let's not do that.
Store of value. Okay, you're right. We're not going to go into this conversation. Let's discuss what the store of value isn't. Store of value isn't something that can lose you 25% in a day. Okay.
Yeah.
Class dismissed. Let's go to the next topic.
Yes. Also, there was something I put it on the chat room about a few minutes ago. Did I put it on the chat room? Actually, no, I didn't. I'm going to put it now. There was a tweet by somebody saying, you know, Coinbase is down, Kraken is down, Gemini is down. This is that. So where's the decentralization and no counterparty risk? You know, it's anyway. I guess that happens with most markets when there's panic. You know, try to execute anything, but. Anyway, it is what it is.
Just imagine Ethereum at the highs of the day was at 34.25 and at the lows of the day was at 1900. Just
Jesus Christ.
Think about this daily move, crazy. Right? Think about this as a daily move. Absolutely. I mean, what can move 45% in a day? Honestly.
Yeah.
Yeah.
Good point. So we have the FOMC minutes today, and I agree with Blake. I think the risk. Where is it? Yeah.
Yeah. Dodge, whatever. Yeah.
Doggy.
Yeah. Yeah. Doggy style.
Metals actually, interestingly,
they're having fun doggy style
now.
today. Yeah.
Yeah, they're bouncing. Gold is up. Silver is only down 0.5%. It was down 3% at some point. So
yes, silver was actually yes, indeed it was. You know,
it's a nice daily candle. If we close anywhere here or higher, it's going to be a great daily candle. But anyway, the currencies.
Speaking of which, gold at the lows of the day back tested the broken channel trend line support, resistance as support.
Perfect.
And it's now almost 1% up from where it started the day, not from the lows of the day. From the lows of the day, it has to be something like 1.5, perhaps a little bit more.
Yeah. Right.
What else, Stelio?
Nothing else in terms of events or anything of note. You know, we didn't mention it on Facebook. I might as well mention it now. We had some CPI from UK, 1.5% year on year versus 1.4 expected. PPI also a little bit higher, and you know, this is in line with the general trend. Eurozone CPI 1.6. I haven't seen a print this high in ages, and that's up from 1.3. Mm-hmm. And we saw also the Canadian CPI, which also beat. So in general, you know, the same trend is there. And, you know, I was talking to a couple of ship owner friends that I have yesterday morning, and I said, what do you think is going to happen? Because these guys, they're not idiots. They see what's
Of
happening. They've
course,
been around for years, and they said,
of
look,
course.
we and a lot of other ship owners are making orders for new builds, and also for they're buying used boats as well. And he's saying, look, you make an order, you get it delivered in 2 years. So these plans that we're making, they're not short term. So I don't think it's going to be. I don't think
Yep.
this is going to be transitory. Let's put it that way.
At least let's state oppositely. People that have proven over several business cycle that they know what they're doing,
Yes.
don't believe this is transitory.
Yeah. I mean, it is eventually going to ease off and things are going to be back to relative normality, but the levels are going to be elevated and it's going to take longer than people think. That's the message I got. So
the only one that pretends to think that it's transitory, and keyword being pretends, because don't forget that we have, I mean, we know that the Fed and central banks are lying as a general rule, right? I mean, I remember in an interview, Bernanke had actually
yep, he said I couldn't tell the truth.
Yes,
Because that was
yes.
Peter Schiff talks about that quite a bit all the time. But yeah, exactly. He said I couldn't tell it exactly as it was because I'm part of the establishment and I have to follow the line.
Exactly. So
like,
that on its own tells you everything you need to know about. Who knows? Do they believe it's transitory? Even if they believed it's transitory, would they actually say it? From what we know, probably not, right? Because they believe that by admitting that it's not transitory, they will in essence exacerbate the inflationary pressures. Because don't forget that there is also a mentality around inflation that in essence exacerbates the problem. For example, if you believe that there is inflation coming, you are more likely to start hoarding stuff that are non-perishable and you're going to use in the future, which creates a bigger supply issue, which puts even more pressure to prices. So, will they admit that it's not transitory? Absolutely not. The only time they will end up admitting that it's not transitory is the exact same time that they will also be ready and willing to say that we don't think it's transitory, so we're doing something about it now, starting today.
Yes, I think that's a fair assessment.
Yeah, so until they get to the point that they're ready to say, okay, we're starting to do something now, there's no chance they're going to admit that the problem is not transitory. So in my opinion, just paying attention to what they say is completely pointless and useless. The only usefulness it has is as long as there are still some market participants that are foolish enough to believe them, they get somewhat influenced by what the Federal Reserve and the rest of the central banks say. So the only usefulness to hear what they're saying is because some other people listen to the same stuff and some of them still buy, that stuff. So, they act accordingly.
Yeah. Okay. Let's have a look at
the
usuals.
To start with, this is very worrying for dollar bulls. The DXY is currently unchanged on the day, which is near the lows of the day, right? We currently have a doji, while indices are all lower more than 1%.
Yes.
Right. It's what we said in the past that some dollar, some risk off is definitely going to help somewhat the dollar, but I wouldn't expect any fireworks. I expect the dollar to be losing more value when we don't have risk off than gaining value when we do have risk off, unless or until the circumstances that create a risk off become extreme, if they do, when they do, right? So that's point number one. Point number two, I'm not going to say the obvious. The type of price action you're seeing in cryptocurrencies, is a proof of why these things cannot be stores of value. Keep in mind that we were talking, Stelio, isn't it funny? Yesterday we were testing this support area in Bitcoin, and we were
Yes.
saying that we break through 42,000, we can even get to 30.
Yes.
Now, who would have guessed that that could be within a few hours, right? Actually, it wouldn't be that hard to guess, knowing, but still, I mean, quite amazing. Now,
I mean, technically, below that big support zone, there was nothing, really. There's no support.
Yeah, I just didn't
Yeah.
expect that nothing to
Yeah.
actually manifest within an hour, right?
Yeah.
Yeah. So 2 hours, 3 hours, whatever it was. So, nice technical rebound so far from that low. Now, what makes you think that is the low? Nothing should make you think that's the low. I mean, a likely price action from here could also be this, right? So keep that in mind. In any case, 42,000 is now a key resistance area. 30,000 remains a key support area for Bitcoin. Ethereum, I mean, this chart tells you all you need to know, right? All you need to know. And yes, we can see easily lower prices, same with Dogecoin or whatever. I've told you since a long time ago, and I've been saying the same thing to everybody. You want to trade cryptos, you want to believe you can make money trading cryptos, by all means do so. You want to believe that you're going to become rich and you should invest everything in cryptos, sorry, there's something wrong with your brain, right? Because you're most likely to lose everything, right? So you want to approach it as an extremely speculative bet and act accordingly, meaning assigning a part of what you call a portfolio for high risk, high reward trading. You be the judge of what that means. 5%, 10%, 15%, 20%, do so. But do so knowing that you can end up losing everything, right? I mean, I think, Stelio, the news at some point today was that China banned all crypto business. I think that was the trigger for
I saw that headline,
yeah.
although people are saying that it's not a new headline. I don't know, but yeah.
Whatever.
Yeah.
We've talked many times about the amazing underpriced risk of regulation I remember us talking about, I mean, more than a year ago, about how the quote unquote success of cryptocurrencies can be the same thing that leads to their demise. So yeah, act accordingly. Now, do I believe that a crypto massacre can spill over to the rest of the markets? Yes, but only as a trigger.
Very short term and
And only as a trigger, meaning, many of the speculators that speculate in all asset classes, they get a big whipping on cryptos and they suddenly realize that, there is no such a thing as a, free meal, or there is no such a thing
they
as
get a big margin call, right?
Yeah, true. That as well, right? So, of course, the mainstream hodler is going to remain a hodler. So the thousands and thousands and hundreds of thousands of small investors are going to stay there. They're not going to leave. I bet there are already forums filled with comments like, who cares about a 50% lower? This is like the 7th time it has happened. I'm not selling my Bitcoin ever. I'm not selling my Ethereum ever. I'm not selling my Dogecoin. I'm actually martingaling here and buying more. And it might work, right? It might work again, I mean. But keep in mind that there's going to be one time, and this might be it. And this has already been it for some of them. Because don't forget that the higher we moved, the more people got involved with leverage. And those are already wiped out. At some point, my thesis is that even the people that are not really leveraged are also going to be wiped out in the vast majority of crypto assets. As I said the other day, there are now almost 10,000 of them, right? in all honesty, how many of those do you believe are going to survive in the future? 1, 2, 3, 5, 20, 50, 100? Imagine, even if we assume it's 100, I think it won't. There is another like 9,500 that won't survive. So that's all you need to know. Adam says big support at 0. Yep, huge support at 0. I mean, I bet it won't go lower. Now, we already talked about gold. For me, gold is a slam dunk here, technically speaking. At the lows of the day, it backtested the confluence of resistances at 1850, 1855, and we propelled higher from there. So there's no more discussions that can be made here. Platinum, nothing has changed here. We're still consolidating within this triangle. It can still work two ways, you know what I mean? Either one more leg lower and then higher, or straight higher. If I had to look at platinum in complete isolation, I would assume the next move is lower. Now, seeing how gold behaves and knowing that they can't really diverge too much, I mean, it's not that gold can be pushing new all-time highs and platinum be pushing lower. It's quite unlikely. I remain a little bit torn. Now, having to do with palladium, I think it's another clear corrective move lower. Clearly corrective characteristics. I mean, I see nothing impulsive here for the time being. As long as we trade above 2,700, there's nothing bearish with it. Now, copper is trying to also put some kind of a corrective move here. Now, the form of it, the initial assumption can be that this is a little bull flag, but we're currently testing support. So that's an assumption if we hold there, right? Now we break lower from there, and then we're talking about something more complex, a deeper corrective move. 436 is the first area of support. At some point, copper will also have to have a major corrective move lower, no matter what, right? It's been now 14 months of non-stop appreciation. At some point, there's going to be a corrective move lower, no matter what. Now, is this the beginning of it? Not if we hold this flag support. And don't forget, Gregor said the same thing. What was it? Yesterday that we had him on Friday. He said, he said the same thing as I've been saying many times. You should always assume that the most likely interpretation is the one that aligns with the current trend. The current trend is higher, so the first assumption should be that this might be another bull flag, until proven otherwise. Nickel has had a major rejection from the 61.8. We were talking about the importance of that level being, in essence, the pivot area, the last stand for the bears, and it has held. I see risks for a deeper corrective move, as we were initially talking about in the case of nickel, so keep that in mind. Now, having to do with the FX world, nothing really has changed since yet. Having to do with equities, let me go first to equities. This trend line support, in my opinion, is very important here in the S&P, right? Currently coincides more or less with the previous low at 40.30. You want to be more conservative. Let's make it 4,000, which is previous resistance area as well. I think that we break below 4,000 and then we open the door for finally some type of a proper corrective move lower. Until that happens, there is no real, technical event to talk about. Same deal here with the Nasdaq. I mean, Nasdaq in between these areas, short term, yes, it looks bearish, but nothing major to write home about. What I want to stress once again is the Nasdaq to S&P ratio, because as we had said in advance, it still looks bearish to me. Look at this. I think we're building another little symmetrical triangle here, which I expect will break lower, and we're going to see a move towards 3 next. So keep that in mind. And especially as long as cryptos move lower, since now the Nasdaq has several companies that are directly or indirectly, connected, involved, half involved with cryptos. That can be an extra push lower. Speaking of which, let me see what this company is doing here. Tesla. Yeah, Tesla doesn't look good at all. Yep, doesn't look good at all. So extension.
Well, if they haven't sold their Bitcoins, then they've got a pretty big loss now. Anyway.
And that's still devastating since they've never made any money from selling cars. I mean, they stood a chance there for a minute to make money from trading cryptos, but even that has gone out of the window. Oh
Yes.
my God! I mean, these markets are so funny. Where would I buy Tesla? Let me tell you. I think this is, I have a very clear answer for you. 77. You think I'm kidding, right? No, that's where I think the value is for Tesla. At 77. Previous highs over there, retested as lows over there. 77. Offer me 77, I'm buying it. Offer me anything higher, I'm not buying it. I'm not saying that it's going to go all the way to 77. I'm saying that if I had to buy and hold, I wouldn't buy above 77. Dimitri says BTC fully retraced wedge. Let me have a look at. Sorry, wrong. This wedge, yes, that's what wedges do. The wedges are terminal formations that, technically speaking, after they break, we fully retrace them. The problem, Dimitri, you know what it is? If we had Gregor here, you know what he would tell you? Gregor would tell you the following. Gregor would tell you this. That's one likely scenario. Now, there is also the corrective type of scenario, which is this is A, and then we need 5 waves lower for a C, because this is B. We need 5 waves lower for a C, but we haven't seen a fourth wave. If within this, right, we haven't seen a fourth wave. So, and the fifth wave. So the conservative scenario would be a lower low from that low anyhow, right? So we should be looking for a new low, in my opinion, technically speaking, no matter which of the interpretations. And of course, the worst type of case of scenario is that this is a 5-wave move lower that will unfold, which would require then, more downside, right? But in any case, this is an impulsive move here, which at best case scenario is a 5-wave C wave of a corrective move. But as I said, even under this scenario, we should be looking for at least one more low, because this type of a move we see today is not. Let's go to a lower time frame. Actually, let's look at Bitcoin on a lower time frame. Yeah, as you see, yeah. So even under such a scenario, we would need something, like this before we can say it's over. Okay, what else do we have? So we talked about stocks. Now back to FX. I think, as I said before, that if we see this move spill over to equities, we should still see some support in the dollar. But unless it becomes uncontrollable, I mean, the rout in equities, I wouldn't expect something major to happen. So bottom line, I'm still happy to be short the dollar, and I have no second thoughts for the time being. No second thoughts whatsoever. I know. Somebody can say here, look at the divergences in USD NOK. We might be finding a bottom. I heard this there, 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 so on and so forth. So, I don't really mind. I'm going to stick with being short the dollar. In this case, my mental stop has moved to 840 in USD NOK. My mental stop. In which case, above it, I'm going to take half profits and then wait and see where I'm going to sell another half. Also, keep in mind, look at the divergence, right? Aussie lower, Kiwi lower, CAD, NOK, and the rest of the commodity currencies lower, while Euro and Pound are higher. Why? Because we're seeing some risk off. This is normal behavior. So what is the highlight currently in the FX world? And that's where I wanted to go. In the crosses, right? Here is Euro-Aussie that has now broken above this range. You could interpret it as a triangle, but it could also be interpreted as a range, right? Between 157 roughly and 150, 250. Here is Euro Kiwi, which is still recovering in an ascending channel. Here is Pound Aussie. Where is it? Here it is. So here is Pound Aussie. Right. Next resistance at 184, by the way, in Pound Aussie. And here's Pound Kiwi. So despite me believing that strength should be probably rather short-lived, short-lived I don't necessarily mean a few hours, right? We are definitely seeing these crosses move higher, and they will continue to do so if we do see risk off. So your indication of staying short is if we break down from the levels we talked about, for example, in the S&P, right? We break below 4,030 and more importantly, 4,000. I think you can rather safely continue being longy or find, some areas to be long these crosses. Generally, keep in mind that, for the time being and with what we have in hand, it's counter trend, right? So adjust your time horizon accordingly. SILG, the junior silver miners, SILJ, sorry. Yeah, likely breaking out. It's, yeah, you can, readjust a little bit if you want, but it's in the precipice of breaking out. Worst case remains in a prolonged consolidation, which, if you ask me, the chances of continuing higher are much, much higher than actually breaking down. That's what I think. Technically speaking as well, I'm not speaking fundamentally now, right? You see the prior move that brought us into this consolidation. That's why, from a technical perspective, I believe the next move is higher as well. Even if this is a big correction, it would still need one leg higher. That's currently missing. Okay, anything else you want us to cover before we call it a day? And it looks like today's going to be an interesting day. What platform allows you to buy these ETFs? Stelio, IB has these instruments, doesn't it?
Which ones?
Like GDX.
Interactive brokers have pretty much everything. I
Yeah.
buy these by my private banker in Switzerland, so it's not.
I know. I'm buying this through Dimitris, through his private banker.
99%, I think they have them on Interactive.
Yeah, most probably Interactive brokers have all that. Most probably. Dimitri. S&P trend line from March COVID lows to today, right on it basically. Held a couple of days ago. We'll see. Okay, let me see the trend line you're talking about. Let me go to the weekly since we're talking about it. S&P on the weekly. These are the lows. I'm assuming, no, we've broken through that one you mean, right? This one I just drew, correct? Yes. You know, I don't put so much trust in trend lines like this. First of all, because they're extremely vertical. Second of all, because they don't pass from more points. You know, if that low there was also on this trend line, you know, then I would assign a lot more credibility to it. I'm not saying it might not prove, you know, to be accurate. So yeah, it's a good point. It's something to keep an eye on for sure. To begin with, I'm paying closer attention to the shorter term trend line support, which is a little bit lower. This one, right, which passes a little bit lower. So yeah, I mean, you know, in the grand scheme of things, the difference is really minor because we can all agree that if we start on a path to a proper corrective move in stocks, we can move significantly higher. And you know, trying to figure out plus or minus 1% where key support is won't make much of a difference at the end of the day. So yeah. Speaking of which, since I mentioned it before, listen, I can understand the argument here in USD CAD why we might be turning higher. I mean, I'm seeing the divergences and all, but in my opinion, technically speaking, nothing has happened yet, right? I mean, at the very, very, very least, technically speaking, we should see a move above the spike higher that we had after the 2-day rally before we can even consider the possibility that this was, because, you know, I know the arguments. Oh, this was a false breakdown from a multi-year low. Might have been. And yes, somebody can also focus on the shorter term and say, look at this. If we close like this on the day, this is a morning star formation on the daily chart. Yes, it is. Let's wait, first of all, to see that we're going to close like this today. Then let's wait for this high to be taken out. Then we can start talking about counter trend trades and how much they can extend. That's what I believe. Of course, you know, some people want to jump the gun. If you know what you're doing and you've calculated your risk and you know that when you're trying to jump the gun, most times you're going to be wrong than right, but you're looking for very, very competitive risk rewards, right? Because you can be wrong 3 out of 4 times and still make money, right? Because if when you make money, in this case, you make 6 times what you risked, you know, you overall make money. My personal type of trading is, you know, is not of that kind. My personal type of trading is I want to start by, you know, even close to one to one risk reward is just fine for me. And then let it ride. And sometimes, you know, you start with a one to one risk reward and it ends up being 10 to 1, right? Like it has happened in this case with me holding the knock. That's the good thing about riding a trend or what you believe is a new trend, right? Because I was really convinced that, you know, the USD knock had topped out after that, you know, inverse V move that we had. You know, so that, you know, that's the advantage of going with a trend, is that frequently it can yield a lot better results than you initially even, you know, dreamed about. That's why, you know, I'm, you know, the more I mature in, you know, in trading, the less I find myself being bothered to trade counter trend. And, you know, for those in the chat room, you know that I took a short-term short trade in the S&P at the end of last week. So, you know, I don't have a problem on occasion to trade counter trend. In this case, it might even make me some money, but I do it on the side. I don't consider this part of my main trading anymore at all. I used to trade mostly counter trend whenever I saw like, you know, short-term exuberance or whatever. But then I realized that we now live in exuberant markets. So it has become a lot more dangerous game than what it used to be in the past. So, you know, I'd rather stick with the trend. You sleep better at night, trust me. Okay, last one, natural gas. And we call it a day. N gas, where is it? Here it is. Nothing. In my opinion, still in a larger type of consolidation. I believe we're going to end up breaking higher. I mean, now the fact that we broke above this consolidation and within 2 days we broke back below it is short-term bearish. Key being short-term, right? Because as I said, the medium to long-term, in my opinion, the medium term, in my opinion, is a bigger consolidation. In the long term, I'm looking for higher prices. So short-term bearish, medium-term neutral, long-term bullish. That's my outlook for it. ST and G. What is this? Scorpio tankers. Okay, wait, let me open it here. STNG. Ooh, nice. Okay. And then we had this. And now we've broken higher from that as well. I mean, the long-term trend was lower, clearly. You know, but this has been some recovery to talk about. RSI is diverging. Would I be buying it here? I would be hesitant, to be honest. I would be buying it somewhere there, though. Yeah, I would be buying it somewhere there. You are in from $13. Okay, that's excellent. Trail your stop loss, if you ask me, there at 17 and keep on riding it. I mean, it's been working in your favor, so you have no reason to bail out, right? You can just protect your profits. You decide how you want to do that. You want to trail your, you know, a limit order that you might have in place. You want to take some profits and leave the rest, you know, running. You know, it's up to you. I mean, other people have different preferences of how they want to do that. Okay, guys, gals. Let's see.
Thank you, Steve.
This is developing as an interesting day. Let's see what we get. Thanks, Tel. Thanks,
See you
everybody.
tomorrow.
Bye-bye.
Bye-bye.